Today we're going to break down a geopolitical earthquake, something that really shook the world, the 2026 energy crisis. Now this wasn't just some temporary price spike you see on the news. No, this was a systemic shock that fundamentally rewired the entire global economy. Okay, let's dive in and see how one single event could send shockwaves across the whole planet.
You don't often see academics use language this dramatic, shattered, but they used it for a reason. This one sentence just perfectly captures the sheer speed and, frankly, the violence of this crisis. It wasn't a slow burn. It was an instant rupture of the very systems we all depend on.
So to really get our heads around how this all went down, we're going to trace the crisis through a series of ripple effects. Think of it like a stone thrown in a pond. We'll start with the initial spark, then move to that immediate oil shock. From there, we'll see how it triggered global economic fallout, then a really dangerous systemic crisis. And finally, we'll look at the whole new energy world that had to be built from the chaos.
So where did it all begin? Well, the trigger was a military operation, right in the heart of one of the world's most critical energy arteries.
This right here. This was the moment everything changed. The launch of Operation Epic Fury wasn't just another regional conflict. Because it was aimed directly at the heart of the world's energy supply, it instantly became a global event. It set the stage for all the chaos that was about to follow.
Okay, so let's move to that first and most immediate consequence, the oil shock. The market's reaction wasn't just fast, it was absolutely ferocious. And this number right here just shows you the scale of the problem. Overnight, 20 million barrels of oil per day. That is a massive chunk of what the entire world consumes was just gone. It was effectively landlocked. And to be clear, this wasn't some planned production cut. This was a logistical decapitation of the energy market.
So why did all that supply vanish? This is why. The Strait of Hormuz, you can think of it as the choke point, where a huge portion of the world's oil has to pass through, saw its traffic collapse by 90%. The world's energy superhighway was suddenly a ghost town.
And here's the result. Sheer fear and scarcity sent prices into the stratosphere. By the middle of March, Brent crude hit over $138 a barrel. It was a level that analysts at the time called a tax on global recovery.
What's so powerful about looking at this timeline is you can see exactly how specific events drove the price surge. The market was already nervous on the 27th. You see it there at $82. The second the operation launched, boom, an immediate jump of over $14. When they confirmed the Strait of Hormuz was closed, it blasted past 100. And that final, terrifying spike to 138, well, that happened when the market realized this wasn't just an oil crisis anymore. It was turning into a food crisis.
All right, let's move to the second ripple and see how this energy shock basically infected the entire global economy. This is where the pain starts to spread way beyond just the gas pump. The contagion was just so rapid and global. Europe, which is heavily dependent on liquefied natural gas, was suddenly staring down a recession and fuel rationing. Central banks like the ECB and the Fed started sounding the alarm about a massive inflationary shock. Shipping lines had to reroute all the way around Africa, adding huge costs. And the pain wasn't just for importers. Even wealthy producers like the U.A.E. needed financial lifelines. Over in Asia, the impact was just catastrophic. Countries were declaring emergencies, and South Korea's stock market just plunged.
And this brings us to the third, and honestly the most dangerous ripple. This is where the crisis mutated from an economic problem into a real threat to global food security.
So here's a crucial point, a concept called the fertilizer LNG paradox. Now, this is something most people don't realize, that liquefied natural gas, or LNG, it's a primary ingredient for making nitrogen-based fertilizers like urea. So when Qatar, a massive global supplier of LNG, was forced to shut down its facilities, the global fertilizer industry was paralyzed almost overnight.
And this chart just lays out the cascading failure perfectly. You can see it clear as day. The drop in Qatari LNG supply directly caused a collapse in urea production. And the result of that? Fertilizer costs spiked by 35%. I mean, what a devastating blow for farmers all over the world, especially in Asia, right when they needed to start their critical sowing season. This is the direct line from a maritime blockade to your dinner table.
A crisis of this magnitude, it was a massive wake-up call for the entire world. It forced a fundamental rethinking of global energy strategy, basically triggering a pivot from a focus on efficiency to a focus on resilience.
Now, before we dig into the market themes that started popping up because of this shift, just a quick and really important reminder, this explainer is for educational purposes only. It is not financial advice. All investing involves the risk of loss, okay?
And this slide, I think, just perfectly sums up the huge mental shift that happened. The old way of thinking was all about just in time. It was focused on maximum efficiency, relying on these long, stable global supply chains. But the crisis showed just how incredibly vulnerable that system was. So the new model is all about energy sovereignty, or you could call it just in case. It prioritizes local production and security over just the raw cost. The goal is no longer just getting the cheapest energy. It's about getting secure energy.
So this new way of thinking created some really clear investment themes. That push for energy sovereignty? It lit a fire under investment in localized power, things like green hydrogen, which uses renewables to create fuel, and small modular nuclear reactors, or SMRs, which are basically smaller factory-built nuclear plants. At the same time, this insane hunger for electricity from AI data centers put a huge premium on reliable 24/7 power. You can see this in action with companies like Vistra Energy signing these massive 20-year power deals with tech giants like Meta.
Which leaves us with a really critical question for the future. In this new, more volatile world, the race is on. Nations and companies are all scrambling to secure their energy independence. The winners are going to be those who can build the most resilient, localized, and reliable systems. If you want to trade with the Quantitative Edge, hit the like button, subscribe to the channel, and drop a comment below with your specific thoughts on the energy crisis.